Tom White, the host of Fast Market here on the Schwab Network. Tom, good morning to you. Let's take a look first and foremost at the weekly jobless number here, 215,000, in line basically with analyst expectations, 220. It's been inching up here ever so slightly, but still kind of hitting that sweet spot.
Yeah, it's kind of reflective of what we've seen out of the jobs market, so far over the last year or so, Ben, where we've got low jobless claims numbers compared to historical norms, which are typically above 300,000. This data started, 1967 through 2024, and I believe the average on those jobless claims over 350,000. So we're still at those low levels. That reflects that the job market is still robust at this point. Continuing claims came in at 1.794 million. Forecast right about that same level at this point. So, if you look at, the unemployment rate at 3.9%, those monthly jobs numbers that have been, in line with what the Fed probably expects at a full employment level. This is just kind of in line and reflective that, the job market's still tight at this point. What does that do to wages moving forward, Ben?
Yeah, we're definitely seeing that, right? When you look at the 4-week average, it's kind of right on that as well. Talk to us about the Chicago Fed National Activity Index. Looks like just kind of furthering that idea that some of the regional data is signaling a little bit of weakening, slowing economy there as well.
Yeah, I mean, if you look at the weak regionals, whether it's, the Chicago Fed, whether it's Richmond Fed, you look at the New York and some of the others, Philly Fed numbers, they were coming in weaker than expected, kind of stabilized at those levels, but at the same time having little negative effect on the overall economy. If you take a look at some of the manufacturing numbers, we're going to get PMI data later this morning. So, yeah, this is one of those secondary or third-tier type of reports that doesn't have a real impact on markets, which, the S&P 500 and NASDAQ 100 are going to open up at fresh all-time highs here, Ben.
Yeah, historic levels. That PMI data due out at 10 Eastern. A little bit later on, we'll get a look at the Kansas City Fed as well. Their manufacturing index comes out. We also have new home sales as well as natural gas inventories today. Tom, let's talk a little bit about currencies. Let's talk treasuries. They kind of, I feel like, fall right into that same category, range bound, contained, and as I said before the break, kind of aiding, I feel like, or helping sustain stocks at these upper levels, right? Definitely not providing a headwind.
Yeah, that firming of the dollar, I think, Ben, is, kind of an outlier here where it's not lending any headwinds to the equity market at this point. It kind of pushes against that narrative. We've seen some firmness in yields after that fall of nearly 9 basis points last week as far as the 10-year goes. So, yeah, having little impact, I think if you look at the earnings season as it's wrapped up post Nvidia here, is the fact that it's better than expected. It wasn't as worse as maybe a lot of market watchers had anticipated at this point, so lending some support to equities. Now, moving forward, if they were going to get more rate cuts maybe from overseas before we start cutting here in the U.S., what type of impact does that have on, European currencies in particular, and what kind of support does that lend to the dollar? Because with the dollar still hovering below that 105 level at this point, it's not creating any headwinds for equities, but if that dollar reaccelerates, reignites, moves back maybe above 105, gets back to 106, 107, that'll provide the headwinds for equities at this point.
I would agree. 107, definitely. We looked at the chart before the break. Again, that's that upper extreme. You've got 10-year yields, 5%. The upper extreme, should we revisit those? I would think that stocks would start to reflect that a little bit. But, Tom, I feel like every financial news network in each block is going to be discussing Nvidia. You just mentioned here a minute ago, a big part of this rally that we've seen into and now coming out of those quarterly results. What stood out?
Well, I think what stood out the most is the growth in the data center, $22.6 billion. That's above expectations for that number. They're generated, their sales numbers generated 86% of the value from those data center sales. So that's the big number that kind of stuck out to me. Beat on EPS above $6 a share. But then revenue came in just above $26 billion. But now, remember, the estimates going in was about 24.5 billion. But the whisper number on the street was 26 billion. And then you look at the guidance moving forward. Q2 is expected to be about $28 billion in revenue. So we've seen that acceleration. Some of the commentary from CEO Jensen Huang about moving forward and their new Blackwell chip. What does that mean for the company? Because that's not going to actually get shipped until later this year in the fourth quarter. But he said we're going to sell a lot of Blackwell chips this year. So I think maybe kind of signaling that this isn't over, and this AI chip boom that we're in the midst of, maybe second, third inning at this point, Ben, but a lot of runway there, because he said that they still have capacity issues for customers that are lining up for these GPU processors, and that's a benefit for this company. I think it's lending support to the equity move to the upside here. Remember, Nvidia's over 5% of the S&P 500 and the NASDAQ 100, so you're seeing those two indices at fresh levels at this point. But this was another stellar blowout quarter. Remember, the rally in Nvidia started last May in that earnings report that blew expectations out of the water. But look at that data center revenue from year-ago levels, up 427%, Ben. That's pretty spectacular, and you can't. There wasn't anything in this report that you could have taken away and said
that wasn't impressive.
That there wasn't a crack in the foundation of what you saw out of sales. Even the China commentary from the CFO, it wasn't negative in any respect, and I think a lot of people were expecting that as controls from the U.S. On chip sales to China is a red flag, but at the same time, they didn't seem to have any concerns about that. Yeah, this is a stock, again, that's going to attract a lot of attention here today. These results are going to be parsed through quite a bit here in a very positive way, I would imagine here. Tom, and even in the newsletter, Tom puts out every single morning this report of all these stocks that we should be watching. I mean, literally, I looked, it's Nvidia with these price target hikes and all these analyst comments about there must be 10 different listings for Nvidia, but then just below that, it was Snowflake, right? What's making headlines there? I saw the stock spiked up as well. Up just over 4% here. Now, going into this earnings report, Ben, I think if people have to take this into context. You hear a tech name and you're thinking, oh, here's some growth numbers. But they've seen slowing revenue growth as far as a lot of their sales. This is a data warehouse, cloud-based data warehouse manufacturer, in that space. How much memory do you need? They've got big customers that have annual revenue streams of $1 million. Those continue to grow. But the bar was really low going into this report, Ben, just because of that slowing sales. And they weren't fully profitable at this point. Fiscal first quarter product revenue increased 34% to just under $790 million. That's above expectations there. Product revenue, which makes up a bulk of their business, they said will be at $805 to $810 million for the period that ends in July. So guidance a little bit better than expected. They've got that new CEO that came from Google Alphabet, and he's starting to see the need to accelerate growth at the cloud-based analytics software firm while fending off competition from rivals. Because in this space, Ben, recently we've had some misses on guidance moving forward, but Snowflake, was down 18% going into this report, maybe a little bit of a relief rally. We're not seeing that massive pop. They did miss on the EPS estimates there, but the company did state that the outlook is stronger than expected. And we had some price target hikes and a couple price target cuts, but those were price targets far above where the current share price is trading. Yeah, these are two stocks, again, that are going to be watched throughout the day here today and into the end of the week, next week as well. One could argue into the end of the month. And for months, right? Because they have been a big part of this rally here. Tom, I hate to end on a bit of a somber note, but it looks like also on your list of names to watch throughout the day today, we're talking Live Nation, LYV. This is lower this morning in relation to or associated with this DOJ. Looks like they're going to file an antitrust lawsuit. Yeah, some of the states joining this Department of Justice potential lawsuit. Remember, it's supposed to be announced today. Shares are down about 5-6% today on this news. Antitrust violations related to Ticketmaster's unrivaled control of concert ticket sales. The suit's expected to be filed today in New York. Live Nation, U.S. largest U.S. concert promoter, merged with Ticketmaster back in 2010. Remember, they had concerns about this when this went through, and the Obama administration allowed this merger to go through, creating this behemoth in there. Macquarie analyst came out today, right after this was announced late yesterday. They keep their outperform rating on the stock, and they said that it's going to be a high hurdle for the Department of Justice to kind of win this battle. But we've seen ticket prices on concerts just skyrocket,
yeah.
Ben. It is, a monopoly at this point here in the state. So does it go through? How long does this play out? It'll probably be a volatile period for LYV moving forward.
Yeah, not just the ticket prices, right? The surcharges, the fees. I mean, and then you deal with your state, your local taxes ultimately. I mean, it really starts to add up, that's for sure. Tom White, appreciate you joining us here, taking a look here at the numbers and a couple other focal points for investors and traders as we move throughout the trading day today.